Hello, hi. Okay, as it's been a very volatile Friday. The Nasdaq and Dow Jones all went for further corrections. Um, so what I wanted to share with you today is about the sustained inflation that's going on. And then whether um, the Fed would need to intervene aggressively in a hawkish manner or dovish manner, um, i.e., many rate hikes or lesser than we expected. Right now, there are three main issues that are lingering. One is the supply chain crisis, and then number two is the commodity price increase, and number three is the spiraling wages, meaning wages increase is higher than the inflation, meaning that even though there is inflation, people actually have even more money to spend. So consumer spending will continue to increase, um, and then whether it will affect growth of all the companies. So it's going to see that this inflation issue can uh, how Fed will react, and assuming we predict correctly Fed's reaction, uh, the growth of the companies for the next 1 to 2 quarters or entire 2022. So I just want to show you a very important article about this one from Yahoo Finance.
Well, I think a 50 basis point rate hike is certainly a possibility. That being said, I'm not necessarily convinced that the Fed is fully behind the curve. I know I'm sticking my neck out in a big way and saying that relative to
Yeah, I
where
kind of
the
agree as well.
consensus view is, but coming into this year, we actually felt like comparisons were going to take some of the inflationary fire out of the backdrop, all else equal.
Yeah,
We
the
thought
war
supply
will
chain
take away inflation.
normalization will also help. And so there were
Supply
a
chain
number of
rotation
factors in the
from
fundamental backdrop.
goods
Also,
to
that shift
services.
from durable goods buying like crazy to
Yeah.
potentially more of an emergence from the pandemic and the lockdowns and a shift to more services, leisure, hospitality, travel, etc., might also be a key to helping take some of the inflationary fire out of the backdrop. I definitely think that the Fed needs to act. Our economics team thinks that we'll get about 5 rate hikes this year, all else equal. So I think 50 is certainly a possibility, but I'm not necessarily convinced that the Fed is really that far behind the curve, because we were coming into this year thinking that some of this was going to settle on its own. And so we were actually concerned when there were, a lot of
Yeah, so some of the
conversations,
things you
even a
can let it
month
settle on its
ago
own.
about an intra meeting hike and that it needs to be 50 or more right out of the gate. We thought that was way too aggressive given the backdrop. And so we're not thinking that the Fed is necessarily behind the curve, but they are going to have to continue to chip away at it. The wild card, of course, is what's happening with Russia and Ukraine. And so I think that is going to slow down this potential for supply chain normalization. And so the inflationary fire may certainly linger with us a lot longer than anybody would like. But I think the Fed can take systematic action here to get it under control.
We all hope that you're correct, Amanda. Amanda, good
Yeah,
to see
so
you
as you can
on
see,
this
the
Friday morning.
inflation
Amanda
issue,
Agati is Chief Investment Officer of PNC Asset Management Group.
something
Thanks
to
as always
take
for your
note.
perspective. Appreciate it.
And I will continue again on part 2.